All right, team, welcome back to After Hours. We are going to have an amazing show for you guys today. We are bringing the heat with this conversation that happened on X this past week with two prominent people within the XRPL ecosystem, with CTO of Ripple, David Schwartz, and Akinyele, the Ripple X head of engineering, discussing XRPL native staking. So this would be you as a token holder being able to earn a yield within the XRPL on the XRPL ledger, because I could say the XRPL ecosystem, but we have like Flare Firelight and More Markets and Doppler. Those are ways for you to earn on your XRP, but we're discussing natively like other POS blockchains offer for their tokens. And so we're going to discuss this today. We're also going to discuss Chainlink getting a big nod from Grayscale. And at the end, we will provide some charting. Matt will go to the charts and we'll discuss what's going on with Bitcoin, Chainlink, maybe even take a look at API 3. This is After Hours, team. And we are going to have a great show. You're going to want to stick around to the end. But before we get into this amazing, awesome show, it's important we talk about Crypto Charge. Matt, what's going on over there?
Hey guys, Crypto Charge. We have a full-fledged platform for you guys. It includes all the things that Gavin can throw on the screen here really quick for us. But we go live Monday through Friday, giving you guys a live update, looking at the charts, looking at other news items. We have our long-term trade ideas or our coin library where you guys can see a comprehensive entry-exit plan, limit orders, DCA suggestions, things of that nature. We have some hand-selected news in here. We also do a written summary, so if some of you guys are short on time, anything that we covered in the video is covered here in a nice comprehensive package. And then you guys also get our Discord community. So that's the ability to ask questions, important updates, really well-rounded community in there. We're very protective of our community and a lot of very serious investors in there. So all that, guys, with code YouTube is 50% off plus a 30-day free trial. So you get 30 days free plus for $49 a month. Everything I mentioned here, we don't do anything a la carte. It's an all-inclusive package. So I encourage you guys to at least use those 30 days, check it out, see if it's a good fit for you.
Let's get into the news today. Ripple X engineer explores potential for native XRP staking as David Schwartz weighs in on future XRPL design. Ripple X developer Ayo Akinyele and outgoing Ripple CTO David Schwartz outlined how native staking could work on the XRPL while stressing that such ideas remain exploratory and complex. So just imagine that you can earn on your idle investment. You can earn on your XRP like you would with your Ethereum, your ETH tokens, where you stake it. And with Ethereum, you earn 3 to 5% annually. Imagine being able to do that with your XRP. And so Akinyele sparked this off last week on X, showing how the XRPL could add staking to the ledger. And so this is a little bit different, where Ethereum added staking to its users, its token holders, where you're able to stake, moving away from the proof of work model, moving into proof of stake. This is a little bit different because the XRPL is fundamentally different. It would only really take an amendment. And so we're going to get into how the XRPL has advanced over years, has advanced since 2012, and why this wouldn't be so crazy, because I know a lot of, XRP enthusiasts might, think this is a little bit crazy. Are we regressing here? So we're going to get into that topic. And this is kind of drawing from the proof of stake systems that have become very popular within the cryptocurrency market. Decentralized finance sees a lot of money come in, and that money comes in the form of staking. You buy the token and you're able to lock it away for a long time and earn a yield on those tokens. And this is very, I would say, first initial thoughts here, I would say if we're talking about the institutions that are partnering with Ripple, or the companies that want to partner with Ripple and want to use Ripple payments or want to use XRPL payment solutions, they are using that solution. And then the conversation has always been, oh, then buy the underlying asset, buy the native cryptocurrency of the ledger that you are utilizing, all right? But this takes it a step further now. Now they have a real incentive to want to buy the crypto, because now they could earn a yield on that crypto. No one wants to, sit around with idle assets, even within cryptocurrency land. And so crypto offers so much return on your investment But if we are looking at crypto as the future, it should be able to do everything that other investments get to do. And one of them is to borrow against your assets or earn a yield on them. And so I think this is pretty exciting. And so what would happen is kind of the move away from the burn mechanism, all right? So with every transaction, a small amount of XRP is burned, okay? From inception of the XRPL till now, there's about 13 to 14 million XRP that has been burned. That's not a lot with 100 billion supply. And so this would be a little bit of a departure where instead of the tokens being burned, they would go into a rewards pool, right? And I wanted to read some thoughts here from David Schwartz in a conversation he had with an XRP commentator. There are two ideas floating around right now, both awesome technically, but probably not realistically likely to be good, at least not anytime soon. One is to switch to a 2-layer consensus model with the inner layer being incentivized. The inner layer would have 16 inner validators chosen by the outer layer based on stake and using staking slashing just to advance the ledger. The other is to keep consensus the same, but use transaction fees to pay for ZK proofs of correct smart contract execution so nodes don't have to run the smart contracts themselves. Not quite, he's responding to Vet here. He'll come up one more time. The inner consensus protocol would advance the ledger after the transition. The current algorithm would do amendments, fees, policing the inner layer. This would allow us to increase the diversity of validators without slowing down, advancing the ledger, and allow for lighter, faster, simpler rounds to take place every few seconds. As an extra bonus, the network would only halt if both layers failed. Vet responded here, can you also speak about what we would gain from this? The outer validators would be policing, governing the inner validators, just as now, and they would not stake. Staking would be used to allow a smaller, faster inner set to advance the ledger with slashing, increasing protection against double signing. Again, awesome technically, but I'm not convinced the real benefits are worth the complexity, effort, and risk. So we're discussing native staking here on the XRPL. And I just want to give you a little background here. The XRPL has gone through significant upgrades. It is not the same as it once was in 2012. In 2024, we have the AMMs. We also have native support for stable coins. You also had hooks for smart contracts. So there has been development over the years. The ledger has not stayed stagnant. And so now we're talking about native staking, and it is not the same, as I mentioned earlier, as the transition period that we would see in an Ethereum, where we had a proof of work model before, and then we're moving consensus to be a proof of stake protocol. This would only take an amendment. This would take community votes to add this option, this ability, you could say, to earn on your tokens. And so there, David kind of discussed the potential there for 16 inner validators governed by a larger outer validator. So that would be like the validators of the XRPL today. And then there would be a chosen amount of 16 inner validators, which some could say that makes the ledger more decentralized, right? And so a lot of potential here, and this would not change the RPCA. This would not change the Ripple protocol consensus algorithm at all. It would just be a new feature that would be added, kind of similar to how privacy tech could come to the XRP ledger or multi-purpose tokens. And so I would say, Matt, this is a pretty big advancement. And my first thing I want to discuss with you is your traditional XRP holder might see this and be like, wow, this might be a regression here. Why are we trying to be like every other cryptocurrency network out there? It sounds like we're trying to chase Ethereum now. We're trying to be add decentralized finance to the XRP ledger, and we're trying to chase the ghost that is Ethereum. Do you see that at all in this?
I think that any purist has a difficult time, looking at potential advancements and that there could be sometimes a detrimental effect in some cases. But this wouldn't necessarily make the XRPL a proof of stake model inherently. And there's several ways that we talked about that this could come about, obviously taking those drops that are burned on transactions and distributing those as rewards. There's also talks of utilizing the automated market makers and potentially being able to contribute your XRP to those AMMs and then sharing or reaping some of the reward that is the spread in the AMM there. There's been examples in the past too of other DeFi protocols that would allow you to provide essentially your own liquidity to XRPL DeFi pools and be able to earn on those or at least share some of the reward on that. So it's not so far off. I remember seeing a presentation at the XRPL Summit several years ago with a demonstration of a DeFi protocol that basically did exactly that, that allows people to still have control over their XRP, but essentially provide liquidity to the pool. There's just a few different ways that they're talking about that liquidity. The main difference here, or the main thing that I think that David Schwartz also hammers on, and obviously there's other components as well, but like not creating an inflationary environment if you're going to introduce the proof of stake model, because a lot of proof of stake models, not necessarily it's an inherently bad thing, but when you have an inflationary rate in order to distribute those rewards, it does bring more tokens into the ecosystem. So you do have to think about the balance of that. If you are just taking existing, AMM rewards or spreads, or taking existing drops that are just being burned, and those are now have the potential to be redistributed to those who want to stake, that really doesn't change the inflationary mechanism. At the end of the day, I think about any root of protocol, kind of like the Constitution. You have, a set of principles in there, but we make amendments as time goes on. And these are community-oriented amendments that we have to vote on. So I think that if we are going to bring proof of stake to XRPL, it's going to go through multiple rounds. I think we've seen some pretty fierce discussions, even when we saw, XLS 20 come on live, NFTs. There's been some good changes to the XRPL. I don't think this would be necessarily a terrible thing. If we're just talking about the drops, the fees that are burned, it's a very, very small amount of XRP. So at the end of the day, is it going to be this crazy lucrative model like the other POS models that have an inflationary rate and they're able to offer more tokens? Probably not. If we lean more towards the AMM side of things and allow people to share some of that spread with liquidity providers, probably a little bit more profitable. But again, zero sum here for David, I believe, is one, not making sure that we're not, disturbing finality or TPS, and that we're not adding an inflationary aspect to it. And I think those are two very valid things. I think there's a lot of good ideas that can, circle around that, but you have to have those two at the center in order for people to not be upset that there's being, a relatively dramatic change to the XRP tokenomics and ecosystem.
Mm-hmm. Implementing native staking could be a big driver for people wanting to get into the XRPL, wanting to buy the XRP token. And we discussed this in the past. I think since day one, it's always been, don't buy the crypto because it offers a high APY. But that isn't to say that people still fall victim to that. That still buy the token right, because of that. And so, now we have Evernorth, we have DATs out there that are hoarding XRP, and being able to, cut out the risk and cut out the wrapped XRP and getting like an FXRP with Flare Firelight, this would be an easier way for people to earn on their XRP. You look at Ethereum, $67 billion in total value locked. That's a lot of money. And so if we saw that on XRP, it would be very, well, if we saw that amount, it would be crazy. But it's just the direction is what's counting here, because before we're talking about MPTs and ZKPs, and now it's like, oh, what if we also want to go or bring in the DeFi utility into the XRPL? Because it's no competition. XRPL has less developers than Ethereum. Ethereum has way more decentralized finance monies in it. I just said 67 billion total value locked. And so it is quite, different. Now, that isn't to say that this would not be a fair direction. I would just question, is it departing from some of the advancements that we would see sooner? And I think David was alluding to that about the privacy tech and the multi-purpose token direction, which is very helpful to the tokenization of real world assets on the XRP ledger. And so if the tokenization route is so big, is it going to help that vertical within the XRPL? That would be a question that would be left up to the community. And so, and also too, we've seen other protocols that are XRPL adjacent or that are in the ecosystem, like More Markets or Flare Firelight, that show that there is a demand for staking. So in total here, you could say like within this new amendment, you could see more decentralization. Token holders would have a bigger incentive to hold long term. The cons would be, is it deviating from the things that need to happen today for tokenization of real world assets on the XRP ledger, the MPTs, the privacy tech coming to the XRP ledger? Because remember, Akinali was a person I was talking about a month ago that was saying his next 12 months is focusing on privacy tech and MPTs. And now he's bringing to focus decentralized finance and bringing native staking to the XRPL. So, limited developers on the XRPL. Where's the focus going to go? I don't know, but I hope that there's a clear, because, we'd have to see what 80% consensus for this to be approved, or is it 80% or 90%, Matt? I'm lost right now. It's 90%, right?
It's 90%. Yeah.
And so anyways, that would have to take place, a consensus from the community, in order to implement native staking on the XRPL. And so is it likely to happen? Probably not. This is just something, it kind of looks to be spitballing, but if you follow David Schwartz on Twitter, on X, it's never quite what it seems. I've never seen a conversation like that where we're just spitballing real numbers and not talking about the future of the XRPL in a passe way. But this seems like it could be a potential. I've seen some other people online talk about the possibility of this. So is all the resources there? I know when we talk about the decentralized protocols, we talk about, how much is really behind it. Like when we talk about with Casper, not a lot of developers on Casper. What's possible for decentralized finance on Casper? We saw that update this morning with analytics for decentralized finance on Casper, but it's how much developers are behind the network in order to keep updating and amending and improving the network. XRP doesn't have as much as Ethereum has. That isn't to say that something great can't come, but it is to say that, maybe it would just be better to focus on the tokenization route with the ZKPs and the MPTs. I don't know. That's just kind of some thoughts out there, because David Schwartz and Akinali didn't give a whole lot of depth of what could happen there. I know David Schwartz gave two options, a 2-layer consensus and the transaction fees going to the nodes. And so that's just all the, we have to speculate from there. And so, Maddie, anything you wanted to leave off of this? You're pro, against it? What do you think?
Yeah, I'm not anti. Like you said, there's only so many hands that are actively working on the development side on like a very native level that's not application specific. If I had to choose where those resources went, I'd probably rather see maybe some more effort turn towards one-click, setup for federated side chains to encourage institutions and developers to be more incentivized to want to try and build and sandbox in those environments. I think that with all of the talk about RWA, tokenization of RWA, I think it's more important that we give upcoming participants as much of an easy button as possible to be able to build their own permissioned applications. I think staking is a cool thing long term. If we're going to focus on the staking, I'd rather it be an AMM focused staking mechanism, because I think that's just the more easy plug and play ideology, because AMMs are already just built into the consensus layer. You just be essentially changing the distribution of those AMM rewards. And there's definitely a lot more of I think a long term liquid excitement for that. I don't think retail would be as excited in the AMM side of it, just because it's a little bit of a different beast, and it's kind of more of a long-term effect to actually start to receive a good amount of those rewards over time. And volatility will also impact how much volume is done on the XRPL. So it's not this consistent across the board of what those rewards actually mean. And again, in order to have a non-inflationary model, the actual amount of rewards that anyone can receive in either instance is definitely just going to be a lot smaller than the rest of other, protocols out there. I think this is really going to benefit more than anything banks, institutions, large players that have a good chunk of money that need to park it in a very, very low risk environment. That's potentially going to yield them a little bit more than, let's say, a 6-month CD.
Let's talk Chainlink. Chainlink is essential infrastructure for tokenized finance, says Grayscale Research. The asset manager's research arm argues that Chainlink's suite of services spanning real-world data feeds, compliance tools, blockchain interoperability solves many of the real-world frictions that block wider adoption of blockchain-based finance. Grayscale sees Chainlink's Link token as offering diversified exposure to crypto's infrastructure layer. Per the report, Chainlink is the critical connective tissue between crypto and TradFi, the report said. It can already be considered essential infrastructure in blockchain-based finance. So Grayscale releasing a major research report here declaring that Chainlink is essential to the tokenization of real-world assets. And real-world assets today, if you look up on RWA XYZ, 35 billion today. And Grayscale is saying Chainlink is necessary because of the oracles, the CCIP, the tooling necessary for bringing real value on chain. And calling it, what did it say? The connective tissue between crypto and TradFi. And Grayscale is doubling down on this take, turning their trust into an ETF, turning their $29 million trust into a spot Chainlink ETF. And so a lot of demand for Chainlink here. And I know a lot of people in previous bull runs fall into the hype of meme coins, AI cryptos, whatever trendy narrative is popular that week. But oracles have been here to stay, and they're necessary for decentralized finance. If you think about lending protocols needing the prices or the derivatives or RWA platforms or the cross-chain bridges, this isn't all that sexy, but it's super underrated. And I would say it would be necessary for you as an investor to have an Oracle vertical. I know I'm a holder of API3, which is an Oracle, and it's not as popular as like a Redstone or a Pyth. And you might feel more comfortable buying a Chainlink, right? Regardless, though, just talking about Chainlink itself, it is within a valid buying zone. It is under the 23.6% Fibonacci. It's kind of creeping up on where it was at in December of 2024. If you are looking to get yourself exposed to an Oracle that is maybe not as risky as maybe some of the smaller cap cryptos that I will be partaking in, Chainlink might be a good option for you. If you don't have an Oracle vertical, I'd say definitely add one. Anything else? API3 is one that I'm buying. It's funny because, when you are creating and crafting a portfolio, you want some alpha in that portfolio. But the thing is we're investing into crypto. And so Bitcoin, the high beta stock, and then you have more high beta stocks, which is your altcoins. And so it's going to move with all of risk on, but the question here is how much is it going to move? And with API 3, as we have seen before, because we have taken profits on the big price swings of API 3, it moves fast and it gets going pretty quickly. And so some of these smaller altcoins I have bought in, like a Casper or an API 3, and it has been a worthy investment. I think in the future, we have not seen the full total TP1, TP2 come to fruition here, but the bull run's not over. And I know a lot of people in the comments are discounting those two picks, Matt. And all I have to say is the bull run's not over, and we need to see that crash in Bitcoin dominance. We need to see money move out of Bitcoin, new capital flow into the crypto market. And then at the end of the day, after all that happens and we enter a bear market, then you can be the judge of those picks. But until then, I'm still betting big on API 3. And if you're not willing to bet on API 3, go ahead and bet on Chainlink. Matt, any thoughts there? Any comments before we get into the TA?
I first of all strongly agree that if you don't have an Oracle in your portfolio, that I think that's an important vertical that you should capitalize on, whether it's Chainlink API3 or another solution that you find fit. I think it's very foolish not to have that vertical out there. Like you said, also not the sexiest, but at the end of the day, if you want to look at really long-term portfolios too, oracles aren't going anywhere, right? Like we are not going to deviate away from the need for oracles. Chainlink has done a lot of incredible partnerships, and they've done a lot of great work with their interoperability between different protocols. Working towards permission RWA environments for KYC institutions, giving them access to DeFi pools, but of course still ensuring they're accredited investors. Really bridging a lot of the important gaps between user side interference, especially for like important institutional or high-end, ultra high net worth individuals, and then like clunky tools like DeFi. Chainlink is working towards that interoperability, of course, being able to feed into smart contracts as well, very important aspect in there. Definitely wanted to take a look at both charts. I think we should take a look at both oracles here, potentially before we close up the show. Let's do maybe a little two panel here, and let's do maybe a side-by-side of Chainlink and API 3. One thing to consider, guys, with API 3, because it does run on ETH, is that you have the ability to participate in API 3's native staking pool, which is paying a whopping 45% APY right
crazy.
now. It is super, super crazy. That's a dynamic, it's a dynamic rate. So, based on participation, which you guys can see the target participation, that goes up or down. But I've really been very happy with my long-term rewards for API 3, which we're going to be putting up here on our right side. TradingView. By the way, guys, if you guys don't have TradingView, it is on super sale through Black Friday. Like, it is just dirt cheap for the annual plan. Definitely recommend, if you guys don't have TradingView, to get that set up. So let's look at the API 3 chart here first. On the right side. So we're here on the 2-week chart. I think we'll probably pull the Chainlink to the 2-week chart here as well. And from launch, of course, again, you had really just good market timing overall with Chainlink, launching into a lot of that excitement, seeing actually take off into barely pulling back here in 2020. Saw some really intense, pushing there in Chainlink in those early days. Finally came in for a very deep correction there in 2022, 2023. I do love the, breakout backtest we've had into the previous accumulation range. So you had a long accumulation range here. This was very boring, very depressive, from bear market low in there, 600 days, finally break over it. We've tested it multiple times here. We're still trading well above that $10 level, which actually sets us up still for long-term uptrend. Anything above 10 is technically still a higher low, and we are still in a very good spot for Chainlink. We look at current market up into maybe some of those extension-based targets using a lot of the same ranges that we use on other assets. From current market, maybe a 5x up into the 4.236, being upwards of maybe a 15x opportunity. We don't have any imbalances left behind in here. That's been fully cleaned out there on Chainlink, so it's not something I'm watching for super closely. You guys can, of course, use other ranges as well in here. If you look at the more recent range in here, assuming that we have the lows in, you could see upwards maybe $43 to $63 as those next immediate targets. You guys can always chop up a short-term plan. If we look over on the right side of the screen, and we'll go ahead and just make this one a little bit bigger here. Of course, it's a much newer asset, right? You launched from 21 forward. You've got Chainlink's got a little over 2 years of price action and market dominance since then. If I come out here to, like, let's say the weekly chart, probably a little bit easier to read. Of course, comes in for a pretty big double top in here, right around like that $9-10 mark, breaks down. We actually told our team as this was occurring in here that we were going to be trimming some of our API 3 to buy back. So seeing that there was an imbalance here left behind, reaccumulated heavy in here, bought, sold about 20% of our bag up into that retracement level in there. And then we've seen, of course, some new lows set in since then. So for Chainlink, you get back above 80, 90 cents. You've got a really, really strong floor of support that's back in play here. Bitcoin has found a little bit of its footing, and we are finding some minor support here around 50 cents. The big reasons, though, I guess we can just kind of break this back down to the single chart here now that we've taken a look at Chainlink. Pull back API 3. Sorry, guys. There we go. So we pull back API 3 in here. You guys can also use potentially this more short-term range in here as well for your fib range. So if we're using a more immediate range in here, we still get 7, 11, 16, and 18 as those values up there. So that would be upwards of maybe a 12x, a 20x, upwards of maybe a 32x. Of course, we go from the ultimate high in here to the low that was set in there. We get some repeat values in here. That's going to be in the $7 region, and that's going to be in like the 15 to 16, and then potentially upwards towards like the $30 to $35 region up there. So when I compare these side by side, of course, Chainlink has first mover advantage. It has a ton of partnerships. I still think there's really good ROI overall. Above 10 suggests a macro uptrend, but much larger market cap as a whole, right? Vastly larger than API 3. API 3 is only a $50 million market cap right now, which means a lot less money is required to get the same multiples out of Chainlink. You do get the very, very juicy long-term staking rewards. There's a 1-year vest on the rewards, but they are really, really big APY right now, so probably worth staking it up for a while. And again, betting on sometimes the newer, smaller ones can be nice. I've done a good blend in my portfolio. I've got stuff like XRP and Zcash that's been around a long time. I've got newer stuff like Casper and API 3 that haven't been here as long, and that's kind of also a little bit of risk management, right? Like, I'm not all in on one vertical or one market cap or new or old. Got a good spread across the board. So of course, you got to make a decision for you. That's good. Last thing we'll take a look at here, because we are seeing just really intense price action over here on Bitcoin, and alts have held up decently well, in light of Bitcoin dominance dropping pretty heavily. One thing that I'll point to here on the chart is we talked about the 100K-ish, 103, 102, whatever, that whole region up there. So this is key support. If we lose this, there's a really big gap down towards like the high 80s at the minimum. And we pointed to the imbalance that was created over here. You guys can see this breakout here after and not testing it at all. And we actually wicked all the way down to like 80,500. But we actually closed our candle bodies like pretty much up in that area there. We're grossly oversold here. There's a huge imbalance created upwards towards even 96K, 100K, and then maybe even another test of like 106, 107. I think that the markets are likely setting up for a good short-term reversal here. Of course, as we get to some of those resistance levels, that'll be an indicator if we're going to see breakout or rejection. But I think short-term, there's probably very good opportunity, especially with alts right now, as Bitcoin potentially gets ready to make this catch-up move here, for alts to really flurry and surprise people, because it's been very depressive for the last several weeks.
Alts look like a really good buy right now. And I do want to say Chainlink might be one of the most underrated cryptos you can buy right now. It is helping with the tokenization of real world assets, which is one of the biggest utilities crypto has to offer right now. $35 billion of tokenized assets in 2025 right now. And, with Chainlink's oracles and CCIP and the big giants that it's partnered with, Swift, DTCC, S&P Global, so many partnerships. I will drop in the comment section down below. I remember almost 2 months ago or a month and a half ago, I watched an interview with Sergey, a big head and rep at Chainlink, discussing how they're helping Swift with the tokenization of real world assets. And so it is getting pretty legit here in 2025 as we're getting closer and closer to the end of 2025. Real value happening on these networks. And, you do want to place your chips accordingly. And I did want to say one last thing, because I posted something this weekend that I turned on my HBAR DCA, Matt. And I was talking to one of my friends, and he has a great HBAR position, but he's like, dude, why would I turn on my HBAR position right now? It was at 13 cents. Why would I buy HBAR at this price right now? It's such a good position. And I was like, dude, to the 4.236, it's like a 15x on your money, right? And so if you're a long-term HBAR holder and it's below the 23.6% Fibonacci, I want a big HBAR bag now. After I've gone through all of 2025, all the partnerships, NVIDIA Blackwell architecture, all the news that's coming out of the HBAR ecosystem, I want to be a long-term holder of HBAR. And will HBAR crack 15 cents the next bull run? We'll have to wait and see. I don't really want to gamble, though. I want to stack my position here and now. Even though I was buying, it looks like on my trading view right now, it says I have about a 6-cent average, which is pretty crazy. You guys are going to call me crazy in the comments. Buying HBAR at 15 cents. I just want to stack my bag, because Matt, out of this whole bear market, I had so much opportunity to stack Casper. I did that. So much opportunity to stack API 3. Did that. Last year, stacked my Zcash. Saw success on that. Now I want to stack my HBAR bag. It's a little light, and I want that to be a super aggressive position for the long term. And I think that's where some of your long-term sentiment on a project kind of lays into. Now, if it was at, let's just say 46 cents, 92 cents, there's no way in hell I'd be buying HBAR right now. But now that it's back below the 23.6% Fibonacci, it's not exactly near its accumulation, but it is near the highs of April of last year. It's a good buying zone. It's a great buying zone to be buying HBAR now, at least to turn the DCA on. Don't hurt yourself with a large limit order at this point. Give yourself some time, gradually grow that position. And so, Matt, what are you buying right now?
Right now, I'm doing a DCA right now. I still got the Casper on, getting into sushi right now.
It's never ending. It's never ending.
It's never ending, man. But it's a 5-part DCA. You guys can see the full DCA in our Discord. I update that regularly. Anytime there's a change to my DCA, whether it's completely on, off, changing distribution, I'm putting that all in the announcements channel there for you guys. It's also pinned at the top, so you guys can sift through that. And also on the live show every day, if there's any changes, anything I'm considering, I always let you guys know about that stuff. So, definitely come check that out, guys. Like we talked about, we have a lot of good products that we are involved in, or good protocols that we're involved in, that offer native staking rewards. HBAR also offers staking through their Hashback wallet. Now, it's not a lot. It's capped at 2.5, but hey, it's better than sharp stick in the eye, plus no lockup. It's fully liquid, so that's very nice. And if you guys are hardware wallet users, which at this point, if you have involved in this much crypto, you're involved with this many assets that are involved with staking, the hardware wallet solves so many of those problems. You don't have to have additional seed phrases. It's just the hardware wallet. Anytime you need to get back into your stuff, just plugging it in, not having to remember which seed phrase for which. Clean up your stuff, guys, right? Like, this is a great time to do it, especially with Black Friday. If you don't have TradingView, capitalize on the deal. If you don't have a ledger, capitalize on the deal. You guys can wait on that TV until another time. I promise. There's tools out there right now that if you guys couldn't afford them when they were on full price, like 70-80% off TradingView right now, it's usually 50% off or so off ledgers, off certain packs. Like, invest in yourself, right? Like, get yourself cleaned up, get yourself ready to go. And let's see what this next little leg has to offer us here, because I think it might be exciting.
Team, I hope you enjoyed the show today. If you did, make sure you like this video. Don't leave just yet, and leave a comment down below. What are your thoughts about the show? Did we give the coverage you were looking for with XRP? There's a fly around my room. It's bothering me. Matt's talking. I'm moving my head like this, like a crazy person. Leave the comments in the comment section down below. Any questions you drop, Matt will be actually doing the Ask. Matt, are you doing the Ask Matty show this week?
Yeah, we're going to do it on Wednesday. We're going to close out before Thanksgiving for y'all.
So, I wanted to say this. A couple weeks ago, I told Matt I was going out to California, and he's like, "Hey, man, we should take off." He didn't say we should take off Wednesday. He was like, "Hey, you want to take off Wednesday?" And I was like, "Nah, dude, I could still do Wednesday." And now I'm sitting here, I'm like, I'm driving back to California Tuesday night. Wake up.
You guys, we will let you know. We will let you know on Wednesday. If we're not here, then we're not here. And if we're here, then you're welcome. And that's that. So take what you can get. Otherwise, at CryptoCharge.com, you guys can always be plugged in our Discord. So use code YouTube, guys.
Exactly. Team, you got the value there. If you have any questions, comment section down below. And of course, tap in with us at CryptoCharge. Until next time, team. Bye.